So, what have we got on our agenda for today? Well, what we're going to talk about is, where do we start when we look to sort of make next year our best trading year ever? And we're going to talk about, well, what can we do to help ensure that we start on the right foot in 2024? And we'll talk a little bit about, how can we create a trading plan that supports us in our endeavors? And with that, we'll go through, I'll explain and share with you just a small little exercise that you can do for the remainder of this year to sort of help put in the right building blocks to make next year a really good, solid year for yourselves. And then, as always, we'll have a little check on the live markets towards the end. For those of you who don't know me, my name's Paul. Traded for many years, traded for funds, traded for clients. Primarily, I look to focus on trading FX indices and commodities. I tend to be a trend trader for swing and position trades and a reversal trader for shorter term intraday trading. And Money Market Matters has always been about just helping give you a sort of an entry to the sort of trading week as we get ready for the start of the US market in about, 23 minutes or so. So, we always look at what's the news ahead, what is a sort of major education piece that we can talk about that would help you build your trading knowledge. As always, we'll discuss the ActivTrades platforms and tools, and then finish off with a look at the live markets. So, as always, we start with a little bit of a look at the news, and what we know is that last week was a really big news week, which we discussed, didn't we? And there was an awful lot of big news coming out of the US in terms of CPI and FOMC. We also had big news coming out, well, closer to home, the Bank of England with their MPC, the Monetary Policy Committee. We also had the ECB meeting and the SNB meeting. So lots of news going on there, all of which has led to, let's say, somewhat a good deal of volatility over the last few days. And those of you who've joined us will know that I've always said that I don't necessarily expect you to be able to analyze the news as a new trader, but it is important that you know when that news is coming up, because it will induce volatility, and you only have to look at the charts of the last few days to realize how those markets have moved since that news has come out. But we actually also have quite a bit of news coming out this week as well, and you can see from it there we've got the RBA has got its minutes from the last MPC meeting. We have the Bank of Japan meets to set their monetary policy, which will be interesting, because I think most people would say that the new head of the Bank of Japan, Mr. Ueda, perhaps some of his communication has been a little bit misinterpreted, or perhaps maybe not provided the clarity that people need, and such. So people will be interested to see how that plays out in terms of the monetary policy decisions. You've got Canadian CPI data tomorrow afternoon, as well as the Japanese trade balance. We've got German consumer confidence, which people will take an interest in to get a sense of the German economy on Wednesday. We've also got UK inflation figures, all right. That's what people will be looking at, as well as US existing home sales and and the summer declarations by Bank of Canada. The Thursday, we've got GDP data along with Japanese inflation and their monetary policy meeting. So there's a fair bit of Japanese heavy data and news coming out this week. For here in the UK, Friday is when we're getting retail sales and GDP data. And also where the US publishes their PCE prices. This is the one the Federal Reserve takes the most interest in, about personal consumer expenditure, to help them drive their decisions regarding the sort of direction of interest rates. So even as we sort of people wind down towards the sort of end of the year, there's still a lot of data coming out, and there will still be elements that will have an influence upon the markets this week. So as always, make sure you know where that data is. There is a economic calendar on the ActivTrades website. We'll also find there are other ones elsewhere, so you're able to keep on top of when that data is actually coming out. So how do we go about making 2024 our best trading year ever? Well, as the slide says, I think we can probably all agree that 2023 has been a rather wild year, both in life and the markets. And we've all experienced, change the way of living our lives, as the way we see the kind of new world unfolds. And nevertheless, okay, despite what's been going on, there will be many traders who have made it to the end of 2023 with good returns, whilst others maybe not so much. I suppose this is a chance, okay, for you to reflect upon your trading year. Has it been a good trading year? Has it been a challenging year? Now, I admit part of that would also depend upon how you define what makes for a good year and a challenging year. And lots of people would have lots of different definitions. But regardless of how you define it, how are you going to use it to help you next year? Okay, because you've accumulated a great deal of data, a great deal of experience this year as a trader. How can you use that to make you a better trader next year? So in this session, as we come to the end of the way, and this is the final session for the year, we look at some of the ways that we can learn from this year's trading experiences and then channel that into making 2024 our best trading year. So if we start out on a kind of almost like on the big picture, and we start to look at this in terms of, reflecting upon where we are and what we've been. When I talk to many traders, across the spectrum, from institutional traders to private traders to retail traders, from new traders to old traders, when we talk about many of the challenges that they have, one of the big ones they quite often have is that basically they can't see the wood for the trees. Okay, is that actually they lose perspective on what they've been doing, what is truly important, and what they need to do next in order to help evolve themselves to their next level as a particular trader. And with that in mind, what happens is when I talk to traders about their challenges, well, there's normally quite a long list, okay, of traders will have had their challenges, but they very often come down to sort of these sort of simple pointers. So some traders will be upset because they have been missing moves. Maybe they're a fear-based trader and they have hesitated when they needed to pull the trigger on their trades. Some traders will be the opposite. They've been over trading. They're a greed-based trader, and invariably they have struggled, because invariably they have over traded in terms of either the frequency of trades or the size of their trades, which leads into the next element, which is about they have demonstrated poor risk management. And that poor risk management can invariably, once again, that can be defined, several ways in terms of people may not have used the stop loss. People may have used stop losses, but in the wrong areas. People may not have respected stop losses. People may have not position size, or people may have position size, but still position size too large for their account. And then we also have the kind of very standard ones that that link into the disposition effect, namely that some traders, they are cutting their winning trades far too quickly. All right, they are snatching at any little bit of profit. And on the flip side, you'll find traders that are letting losing trades run too long. All right, that's they are basically not cutting their losses as quickly as they should. And so maybe this is an opportunity for you just to take a moment to reflect upon your trading year, and you can just sort of ask yourself, have any of those elements been present in your own trading for this year? And you're welcome to put your own comment in the chat box if you wish about that. Okay, there's certainly never any judgment. Okay, we're all traders, all trying to be the best traders that we possibly can be. We're all trying to evolve to our next best trading level. But part of when you go through a reflection is recognizing and understanding. Okay, where am I? What have been the challenges that I may have experienced? Even if you've had a good trading year, even if you've had a solid trading year, you may well have still had challenges, and it's worthwhile being able to sort of stop and sort of just take a moment to understand and recognize what they may be, because that raising of awareness about your challenges, once you're in a position to raise your awareness, well, then you're in a position to start to make better choices. And when you make better choices, well, then you increase the probability of achieving better outcomes. So if you've had a challenging year, you know, and a few of those challenges that we talked about on the previous slide, you know, have been present in your trading to the extent that, you know, it's caused you problems, caused you challenges. Well, very often what I find, okay, is when people speak to me, okay, about improving their trading, very often they come to me wanting revolution. Excuse me, a cough there. They, you know, they want to basically want to scrap everything, you know, throw the baby out with the bathwater, as we would say here in the UK, and they want complete change. They want complete revolution. Whereas actually, in my role as coaching traders, actually, more often than not all the time, but more often than not, actually the trader is in a position where they need an evolution more so than a revolution. But of course, if you've had a challenging year, it's kind of easy to sort of, as I say, to think that you need a revolution to scrap everything. When in fact, what you might just need to be doing is just going through a process of trial and refinement. Okay, trial and refinement, just being able to understand your, you know, the operations in your trading business and be able to cut out the elements that no longer serve you, and then basically leverage and improve on the pieces that you are doing that are serving you well. But possibly sometimes when we're in the middle of it, or when we're in the thick of that, we kind of lose the sight of it. Okay, we lose the perspective, and sometimes having that sort of that either A, that time to reflect, or B, having an objective viewer from the outside is what can actually help us just be able to evolve in our own trading styles. So, you know, as I said, many traders will have had a wonderful 2023, others perhaps not so much, all right? And it's however the year has been, great traders will take the time to review their trading and their losses during this 2023, because there's great data in that. It's a minefield, you know, that you know, you can basically sort of, you know, walk through and use that to basically to power them to greater heights in their trading in 2024. And that's what we want to do. Okay, you know, we want to basically, the trading from the year behind us, you know, is behind us. Okay, all we have is the, you know, is effectively the data, the results, but we can use that to help us. All right, and that's what we want to focus on. Let's talk about how we can actually do that for ourselves. So, you know, as Benjamin Frank said, by failing to prepare, you are preparing to fail, and is absolutely right. Okay, and I would suggest in every endeavor in life, but even more so in trading. And so, you know, I encourage traders to do themselves a review of 2023 in an effort to be able to prepare themselves for the year ahead. This time here, this you know, the last couple of weeks of the year, I appreciate that it can be, quite busy, quite intense with, let's say, non-trading activities as people enjoy the festive period. But, you know, even within that, you know, just finding yourself a little window of a few hours to be able to sit down and review your year and use that to make your next year better is time well spent. Okay, absolute time well spent. You know, and it's worth understanding and, you know, and taking it on board. Okay, you know, and here's, you know, if you don't want to listen to me, you know, we'll learn it from a true market wizard, Paul Tudor Jones. So, you know, he talks about macro trading, but I would suggest any trading requires a high degree of skill, focus, and repetition. And things like life events such as birth, divorce, death of a loved one, or other emotional highs and lows are obstacles to success in that specific field of finance. And I would suggest that happens to everybody, regardless of whether you are like Mr. Tudor Jones, okay, you know, running a huge big hedge fund, or you're a new trader working away from, you know, a laptop on your kitchen table. Excuse me. You know, these events, they create emotional highs and lows. They can have, you know, a huge impact upon us. And what we have to do is to learn from them. How can we learn from those aspects and build that into our trading plan for next year? And we'll touch on that a little bit more in a few slides time. So one of the ways we can start is by doing a business inventory. So there's a little exercise that you can take away and start to do, as I said, over the next couple of weeks. A little bit of a tasking for the holiday period. All good businesses keep a close eye on managing their stock levels. And in your trading business, it is your knowledge and your intellectual property that is your stock. And as I said, like any good business, it's important to do a stock check every year, because when you're engaged in that trading day in, day out, you sometimes forget how much you have learned, how far you have come, and how far you have evolved as a trader, because you're just basically sitting down there engaging in executing activity. And actually, this is a chance, as I said at the start, traders know they can't see the wood for the trees. And by doing this is a little exercise that helps you start to sort of do that, to start to be able to take a bigger picture and understand how far you've come and how far you need to go. So here is your exercise for the holiday period. Something for you to take away, okay, and work upon over the next couple of weeks, and I guarantee that it will benefit you. So take you can do it on a Word document if you wish, but alternatively, just get yourself a nice journal, sit down, and basically write down everything you have learned about the 4Ms of trading. Okay, just write down, scribble it down. What have you learned about markets? What have you learned about methods of trading? What have you learned about money management? And also, what have you learned about yourselves? Okay, write down everything. Just write it down. It doesn't have to be grammatically perfect. It doesn't have to, make perfect sense at this moment. It's a case of just taking an inventory of what you have learned about the 4Ms of trading, right? Write down also all of the trading ideas which have resonated with you. So, maybe you have worked on developing trading ideas yourself. Maybe you've watched other people's trading ideas, and look at the ideas which have resonated with you. Okay, look at the ones that they appeal to you, that leap out to you. And equally, write down all the trading ideas that you resist, okay, that you do not like, that you don't understand, or that just don't click. They don't gel with you at all. And that's an interesting kind of little exercise to do. And as I said, write down what you believe you still have to learn about the 4Ms of trading. Okay, what do you believe are your particular areas of weakness? So, as I said, just put a couple of boundaries around yourself, sort of ring fence a little bit of time, sit down, write it, do it. And I guarantee, you'll find it a useful exercise, an exercise that will help you. Okay, it'll help you, just to understand, how far you've come. But being able to sort of see that and go through that will give you, great insight into, your journey as a trader. Then go on to the next part of this, okay? The next part of the exercise, which is about reviewing your list. Now, what we mean by this is that by writing down what you know, it provides perspective on your journey and also gives you confidence, okay? Confidence in the fact that actually, do you know what? You have learned a huge amount. You've probably learned and taken on board much more than you give yourself credit for, because as I said, when you're just doing this every day, you sometimes lose sight of that. You can't see the wood for the trees. But by writing it down, you provide yourself perspective and confidence. By writing down what resonates with you, okay, what you've seen that you've liked, what you might be doing is you might be sort of having the kernel of what might be your next trading method, your next idea. Markets change, okay? Markets change all the time. And so it's your ability to adapt to that change which will actually help you in your long-term trading journey. And so by being able to identify what resonates with you, even if it's not ideal and needs to be fully worked out as a trading idea, it might be just the start of an idea that helps you further down your trading journey. Also, by writing down what you don't like, okay, or what you've been resisting, you give yourself an opportunity for reflection upon why. All right, why are you resisting a certain idea, or why are you resisting a certain trading style, or a certain, might even be an asset class, or why is it you're resisting? And dig into that to understand why you are resisting, because I think you'll find that that will give you fantastic insight. Is it because you just find that idea is just, it just is outside of your intellectual knowledge? Is it because it's too much hard work? Right? Is it because it seems like it's too much hard work? Could it be just because that, it's outside of your comfort zone, right? Just take a moment to reflect upon why that is, because I think you'll find that that gives you fantastic insight into who you are and how you operate. Excuse me. By writing all of these down, what you need, okay, to learn, well, then you have the start of your 2024 goals. All of this will feed in to basically how we can sort of, turn these into useful elements of our 2024 goals as part of our 2024 trading plan. So what we're talking about is invariably is leveraging the kind of insight into basically turning it into plan. So I've got just a couple of examples from sort of old clients of mine, and so here's one, Trader Vic. So when they came to doing their reflection, in terms of markets, the kind of points that kept coming up was that Trader Vic, his best performance was on intraday trading, and basically, he found it worked best on focusing on the DAX in the morning and Nasdaq in the afternoon. In terms of methods, he liked trading a very simple setup like the 3-bar reversal on an intraday DAX instrument. But he also realized he struggled to trade crypto effectively. Okay, it wasn't really an environment that suited his particular style. In terms of his money management, he realized he was happier in himself when he was only risking 0.5% per trade, and he was also much more comfortable when he had less than 6 positions on in his trading account. In terms of managing himself, he realized he traded much better when he focused on opportunity rather than on actually trading to need money. When he was sitting down there just looking for opportunity rather than just sitting down there to making money, he tended to trade much, much better. And what he also realized he needed to do, which he needed to avoid burnout. Okay, he needed to avoid trading when he was tired, because that's what kind of led to over trading, which led to sloppy mistakes, which led to losses. So that's what Trader Vic, just from doing the exercise, started to pull out. Okay, from his own basically reflection upon his trading year from the year ahead. What he's able then to do is to start to look at, turning that into part of his goals and objectives to evolve himself to his next levels as a trader in 2024. So things like strengths, he has good routines. Okay, he was good at journaling as well. His weaknesses were, he gets impatient, okay, with slow trades that don't go his way straight from the off, and he's sometimes distracted by too much opportunity. In terms of his areas for development, well, he realized that he needed to learn about fixed income markets, which was something that he didn't really know anything about. And he also wanted to work on finessing his entries to improve his reward to risk. And so it played into his goals for 2024 was that he just wanted to focus on 3 good trades per day, and he wanted to focus on improving his trading metrics. Okay, so basically just understanding his key performance indicators and being able to sort of just improve them slowly but surely as he went forward. So hopefully you can see a little bit there about, having done the exercise, he's able to just start to reflect upon, what he's learned from his 4 M's of trading and, his trading endeavors indeed, and also start to recognizing, what his strengths are, what his weaknesses, where his areas of developments, and what sort of simple goals he can commit to for 2024 in his own particular trade. So to conclude, before we switch across the charts, is that, I think it's fair to say financial markets in 2023 have provided traders and investors with a bit of a wild ride. There's been some interesting moves. For some of that, they will have provided threats, okay? For some of these wild rides in markets, they will have provided threats. For others, it will have provided opportunity. And the question is, which was it for you? Have markets this year, have they been a threat or have they been an opportunity? And with that in mind, how do you make 2024 your best trading year ever? And, what I'm suggesting here from what we just looked at there is start by reviewing your performance of this year. Start by, as I said, ring fence a bit of time. Give yourself a couple of hours, a bit of peace and quiet. Sit down, get out a journal or open a new Word document, whatever. And then basically look to write down everything that you have learned, okay, about those 4 M's of trading, markets, method, money, and myself. Look at, what have been your hardest lessons, all right? What have been your hardest lessons to learn this year? What have been your biggest mistakes and why? And there's no need to be hard on yourself. You're a human. We all make mistakes. It is about actually how do we respond to those mistakes. And also a question of, well, what have been your greatest successes? What have you, really taken away and been able to learn from that? And then start to build a plan to hit the ground running in 2024. Okay. So it's, as I said, it's an exercise that will take a few hours of your time to do it properly, but I can assure you is ultimately beneficial towards your trading journey. Remember what I was saying at the start, it's not necessarily about revolution, it's about evolution. It's about taking all the data that you've acquired, this year and being able to extract, valuable insights from it. Okay, you've paid for that data in time, energy, money. Now is a case of, well, I need to review and debrief it in order to get the most out of it, so I can basically use that information as the starting point for some of my goals, objectives, and trading plan for 2024. Understanding what are your strengths, what are your weaknesses, what are your areas for development, and what are the kind of simple goals that you can commit to that will help you going forward right into the new year. So we're going to switch across to the charts now, okay, to have a little look at how markets have played out and set out. But if you've got any questions or comments, okay, you can always get in touch with ActivTrades. The English desk number there, as you can see, 0207 6500 567, or more likely email englishdesk@activetrades.com if there's particular feedback you'd like to offer, or if you'd like to see more of the these kind of sessions in the future, then by all means let us know. We always like the feedback. Or if there's particular topics you'd like to see us cover, we'll always be very pleased to sort of see and hear that, so you can do that there. And if you just bear with me a moment, what I'm going to do is we'll switch across the charts and have a little look at the markets and see how they've been playing out for us for what will be the last couple of weeks of the year. So just bear with me a moment and we'll switch across to the charts. Okay, so what we're here on is this is an ActivTrades platform, one of the ActivTrades platforms here. This is actually my profile for the US dollar. That's where we'll start this week, I think, just because that's what's come up. And I often say is that when you're looking at FX pairs and stuff, you clearly want to understand the dollar index. Dollar is the big daddy. Okay, it's the big gorilla in the FX market. So you always want to know what it's actually doing. And so I have a profile for all of the major currencies, but one for particularly for the dollar. Here the dollar index, but also against all the other major pairs. Okay, so Aussie dollar, Euro dollar, pound against dollar, dollar Swiss franc, Kiwi dollar, dollar Canadian, dollar yen. Okay, but if we look, let's have a little look at the dollar index here. So I think it's probably easy on the weekly chart. The weekly chart here on the dollar index. Let's have a look at this. For those of you who've been joining us all throughout the year, we talked about that fabulous run that we had there, okay, on the dollar index. We had effectively this, there was kind of a bear trap there at 100, okay. We pushed down to it, had those few weeks up, and then that finished with this very scruffy double top second leg finish with a bearish engulfing key reversal. And since those highs, okay, at around about 107.50, we've kind of drifted our way back down here. And a couple of weeks ago, I was looking at where we are going to take a breather, because we printed a rejection candle at the 50 and actually turned into a bit of a morning star. But you can see what last week was like. Last week, after CPI data and FOMC, we saw a strong sell-off of the dollar, and most people, I think, were expecting that. That was kind of expected that, but it did lead to some kind of volatility, when I think what we saw was the kind of We saw some of the other members of the Federal Reserve trying to row back on some of Powell's comments from the Wednesday evening. Okay, and hence we saw a little bit of volatility towards the end of that particular week. If we just look here, okay, I'm just going to just go on here, okay, up to the into the sort of a daily chart there. Let me just we can see in the daily chart the kind of the moves that we had. That kind of strong moves off the weekly were replicated there on the daily chart as well. Okay, and I was particularly interested in variably. Here we go. Once we'd had this high at the start of November, it was this move here. Okay, this move here was this kind of long leg down, breaking the consolidation period we're in, and pull back up into it. The 20 here has basically rolled its way over. It's now between 50, and then basically that's what we've seen there. Okay, that was the move that we've seen. There's almost like three pushes there. Okay, three pushes to the downside on that element. That is kind of really fascinating to watch and see. Kind of amazing to sort of see how that particularly plays out. Thanks, Brandon. You're very welcome. Thanks for joining and stuff. To see how that plays out, and that has been just quite some amazing run there. Okay, as we have seen the dollar go from here being the strongest of the major FX pairs to now being the weakest. But of course, what we're interested in is, well, okay, how do we use that information? How do we turn that into a trade idea? And so what we look at, how is it played out against the majority of the other currencies? So if you look at, for example, dollar against Swiss franc, what we have seen is, once more, just drawing tools, is that that weakness in dollar and strength in Swiss franc has just continued there, as we can see that ourselves. And now you'd be looking at, well, okay, is there that kind of these lows from earlier in the year? Is there a chance that over the next 2 to 3 months, that invariably we kind of look to move our way down there if we continue to get Swiss franc strength and dollar weakness? And that's what we'd be particularly looking for. Okay, so that's what we've been viewing there. There's a good example of weakness versus strength. And certainly the kind of the daily chart has kind of just been reflecting that. All right, it's just been working its way down there. Of course, lots of people will trade the flip of the dollar next, namely the euro dollar. And if we look at that, euro dollar has been kind of interesting in that we had after euro weakness, dollar strength. We then had a bit of euro strength, dollar weakness. But if you look at these last couple of weeks, all right, the price has been kind of volatile in terms of working its way up and down. What we've had is, if we go to the daily chart, this was the euro, strength that we saw. Dollar weakness, euro strength. Then we basically drifted our way down into it. And then what I was talking to people last week was about, let's just draw this in, was that, we were literally, at the start of last week, we were consolidating, okay? We had the 200 above, the 50 below, and we were kind of consolidating and squeezing before we got the, the CPI data, and the kind of FOMC data, and then the ECB data sort of just giving us those kind of moves that we saw there. And a lot of that was just basically based around people worried that, well, maybe not worried, but ECB comments around how they might need to start cutting interest rates in front of the Federal Reserve, because that might just because of the nature of the European economy, and of course that all has an impact into euro. And so what we saw was great weakness in the euro. Now we see in terms of strength and weakness within FX markets, we see both the euro and the dollar showing off a great deal of weakness together, and that is reflected in some of those particular charts. If we look at one of the other major trading instruments against the dollar, it's the Japanese yen. So if you look at this, this is the weekly chart of the dollar against the yen. And what we have seen for a great part is, there was a fabulous trend, really. We had the lows within the first couple of weeks of the year. That was the low of the year, and we've just literally been dollar strength, yen weakness, and then of course lots of people were getting worried because the Bank of Japan had said that they would intervene around about 150, which is what they did, but it took a while for that to turn. And now what we can see is those last few weeks, that dollar weakness and yen strength has swapped places, hasn't it? From here, dollar strength, yen weakness. We've now gone to dollar weakness, yen strength, and that has played its way down there. But when I look at the daily chart, this month hasn't been easy to trade on that because not only have we had big moves off the American data, but also Mr. Ueda, the head of the Bank of Japan, some of his comments have been misinterpreted. He's not been terribly good at getting his exact thoughts across. Markets have misinterpreted it, and then when he's had to come out and row back on comments, that has, of course, has induced these kind of big swings that we have seen in the yen. But so that has made that difficult for some traders to operate with. But we have still seen, for the most part, that kind of trajectory has been to the downside. And apologies. If you think about this, what we have been seeing is from when we were up here just under 152 to being down here about 141. In that kind of month period, we've lost 1,100 pips on dollar yen. That's quite some significant move, over the last 4 weeks. But as I said, not the easiest to trade just because of the intervention or the comments from the Bank of Japan. What has probably been somewhat easier to trade against the US dollar has been some of the comdols. So in particular, what we've seen here, this is the Aussie against the US dollar, and we'd had let's get the drawing tool here. We'd had quite a trending down there period, and I think those of you who joined us, I was talking about, I was kind of interested to see whether we were basing here, and that's what we did. We've had it's not been a clear easy trend, but it has been a direction as we've seen dollar weakness and a little bit of Aussie strength come back in, and that's what's played out there. Okay, and that's what we're always looking to try and get a piece of. Daily wise, you can probably see for yourself there. Okay, for the last couple of months, despite a couple of significant pullbacks, we're still getting that kind of Aussie strength, dollar weakness, and that's what traders have been looking at, trying to take a piece off. That's certainly within FX markets, that's what I'm liking. Is basically trade strength for weakness, and we've seen maybe that a little bit clearer. Excuse me, in the dollar against the Canadian dollar, we had a couple of. Back at the end of October, and price, having rallied for a few weeks, that dollar strength, but we printed here up against this, sort of multi-year level and strike zone. Here we printed, this is a bearish key reversal here on the weekly chart, bearish key reversal, and since then we have worked our way down, okay, as we have seen, once again, that kind of, having seen dollar strength and Canadian weakness, now we're starting to see dollar weakness, Canadian dollar strength, and we have, remember I was saying at the start, is that we've got, we have Canadian dollar CPI, okay, tomorrow, so that'll be interesting to see, if that basically helps with this, based upon how Canadian inflation is compared to American inflation. But as I said, for the last 2 months, what we have seen is having peaked here, is that basically we have just worked our way down here. That has just been dollar weakness, Canadian dollar strength, and that's what we're particularly looking at. One of the other condolences we've had is New Zealand dollar against US dollar, a bit like the Australian dollar. We sold off. We based without giving us any real pretty reversal there, but then we've worked our way up for the last couple of months. Okay, we've just worked our way up there, just like the Aussie dollar. You can see for yourself there, the last kind of 2 months or so, having we based here, we kind of have moved our way stronger, much stronger, even with pullbacks like the Aussie dollar. We have worked our way up, and that is just that reflection of Kiwi dollar has strengthened whilst US dollar has weakened, and part of that strength has been because whereas most of the central banks are looking to cut interest rates, okay, they're expecting it to happen anytime from Q1 to Q3 of next year. So far, the Royal Bank of New Zealand has not sort of alluded to that. If anything, they're saying that they look to hold longer, and they might actually even look to increase. And certainly the kind of news they released today about how consumer confidence is the strongest in 2 years would imply that there'll be no hurry to cut interest rates. So watch to see how that basically implies in terms of Kiwi dollar strength against US dollar and against other currencies. If we see ECB, Bank of England, Federal Reserve all cutting and New Zealand dollar holding, I think what will happen is that will filter through into continued Kiwi dollar strength. And what we also have here is, close to home, pound against the dollar. If I just let's look at this here. So, pound against dollar on the weekly chart, and it's a case of not massively different from the euro against the dollar. What we have seen is, we've seen dollar weakness, sterling strength. Then we had a little bit of a couple of weeks of sort of consolidation. If I look at the daily chart, I was kind of curious to see that. What we had was invariably a case of, we had a good strong move. It's just really been like, like what we've just looked at with Aussie against dollar, New Zealand against dollar, a euro against dollar. We had a period through October of kind of consolidation. In the last couple of weeks of October were just pretty sideways, and then we broke out, came back and tested it, and moved our way up. And that's why I say very often to new traders, if you just keep an eye on the US dollar, I appreciate that there are lots and lots of fabulous instruments and asset classes that are available to you to trade. But within the FX world, okay, and I appreciate we have a truly global audience who join us here for our sessions. What we can look at is a case of, if you can just focus on trading the dollar, okay, the major pairs against the dollar, you're getting great liquidity, you're getting great spreads with ActivTrades, okay, and you're in a position to see when there is correlation between all of those particular currencies, as that's what we've seen. You can see that yourself, and that can help magnificently. Let's have a little look. I think if I've got gold on here, we'll have a little look at gold, and then we'll switch across to how the American markets have opened today. The only reason because is, of course, gold is of interest to a lot of people at the moment. What we have seen there is, this is the weekly chart of gold. You can see that we've got the big number 2,000. You've heard me talk about that all the time. The last time we got up to there at the start of the year, we rejected away. And then we've put in this huge big morning star and flew all the way up. We had a bit of an interesting week the last week in terms of a huge gap open and a huge big run, which turned into reversal. If you look at that last week, that's a bit of a spinning top, maybe a bit of a high wave candle, they'd call that, but it's indecision. It's mostly indecision. But what I would say is that it's still closed above 2,000. Okay, and my view would be, if the last couple of years we hang around, next couple of weeks we hang around here, and if we close above 2,000, that's kind of quite a bullish. That's a bullish tone, all right. That's a bullish tone for gold, to take us into 2024. If we look on the daily chart, as I said, we had a rally. We really did rally strongly there, but that day, even at the day, we gapped open, we came up. But there's a huge big range there, okay, and we still came down and closed as a key reversal, drifted our way down, put in another bullish engulfing candle to get us back up above 2,000. And as I said, I think for the number of trading days we have left in the year, I think a close of the year above 2,000 would be very bullish for gold going into the next couple of weeks and stuff. And I think that would be into the next year and stuff. And I think that would be something I will be watching upon that. All right, let's have a little look at the US indices here. Okay, we'll just have a little look at how the markets have opened, how they're playing up, and what the markets are opening for. Just looking at that there, just super. So, if we look at this I'm going to look at this here. I'm going to bring these out on start on the high before we look at how they've opened today. What we have seen here, this is the Dow. Dow was basically, look at that. You've got 1, 2, 3, 4, 5, 6, 7 weeks, okay, of bullish closes, closing at new highs there, okay, just closing absolutely, just looking for us to close it on it. Will we close at new highs for the end of 2023? Which, if you'd have told me down here that would have been closing at new highs at the end of 2023, I would have struggled to believe it. But you can see, bang, that's where that 350 billion of extra liquidity in November came in, and you can see where it's gone, and it's pumped those stocks much higher, which has just been quite amazing. Nasdaq, as you can see, Nasdaq here. Let me just draw in these levels here. Nasdaq itself, closed last week above those kind of highs of 2021. So once again, I'm also looking. Are we the last couple of weeks? Are we just going to close the year out on new highs? That would be quite something. The S&P 500, okay, is is kind of lagging compared to sort of Dow and Nasdaq, but you can see for yourself it's just under those highs from the start of 2021, 2022. And you've got to sort of think, based upon the sort of real bullish sentiment and momentum we have, it's got to be looking to push its way up and above there, hasn't it, to sort of finish the year on those particular highs. And what has also been of interest is the Russell 2000. Those of you, you've been here for a while. Let's just do that. You can see that we talked about how 2000, okay, 2000, big round number. 2000 here comes up, it rejects. It comes up, it rejects. It comes up, it rejects. And we talked about this at the time because there's some great reversal setups there. And what has happened is we've gone down to where the kind of the sort of lows of last year. Right, let me just change that. Those kind of lows of 2022. Sorry, my apologies. And then what's happened is we've just reversed of it. And once again, last week, see how we really, really rallied all the way up there and closed above 2000. That's the kind of thing. If we look at that on the daily chart, we had a couple of days where we were just absolutely, just gangbusters, and we're closing above 2000. And now you've got to, once again, a bit like gold, if this closes above 2000 for 2023, I would suggest that is quite a bullish sentiment for the start of 2024. That is quite something in that terms, and that's what I'll be looking at. So that's the kind of longer term picture. Let's have a little look about how we're opening up today. All right, on the intraday, and let's just put these all onto the. Okay, and what we're seeing is how the markets opened. Okay, there. So I'll just be. Let's have a look at the Dow. That has been kind of tasty. I would just be, as always, sort of just drawing in what have been the kind of the highs and lows of the day so far. How does the market react to that? I'm always kind of interested to see how does market react at such levels. If I go down to the 15-minute chart, yeah, we can see that we opened up into it. You can see we've opened up into it, we've rallied up to that kind of the high of the day, and then reversed off it, and that's what I'm always kind of curious. You can see there on the 1-minute chart, that's what we did, up evening star formation. Now we're rallying down there, okay, or collapsing down there, okay. And it wouldn't surprise me if maybe we take out the lows as well there. So that's we're looking bearish as we go in. As those of you who've joined me, I've always said I tend to give the first 15 to 20 minutes a miss, especially on a Monday, because we can get some sort of all sorts of volatility after the weekend. But I would say, we've gone up, we've taken the highs, and it wouldn't surprise me now if we drifted our way down to the kind of the lows. That's what I'd be looking at there on the intraday chart. How does that reflect compared to the others? Nasdaq, let's start off there. Let's just draw in these levels, see what we've been doing. Yeah, once again, well, kind of interestingly, is that I'll be looking at that. Here we go, 55 minutes. Yeah, we've taken the highs, but we didn't reverse in the same way that the Dow has. I'd say if you're looking at that, you might say, well, actually, Paul, there's a bit of a head and shoulders pattern there. That might be sort of seeing what some traders would see there. Okay, so a little bit of a shoulder, head, shoulder, okay, your neckline there. But it doesn't seem to have followed its way through, does it? It doesn't seem to have followed its way. It seems to be much more bullish. The Nasdaq seems to be more bullish than the Dow at this particular moment of the day and the week. So. Yeah, you can see even on the 15-minute chart at the moment, it's just still holding up by those kind of highs, whereas the Dow is the opposite. S&P, let's have a look at doing okay, let's see. Excuse me. Let's just draw that in better. Okay, so the way I'd be looking at that is, this is where we opened. That's I'd be saying that's actually. Looking at that being the high of the session, if sort of 20 minutes or so before the highs, okay, and then you can see we've raced up there and taken it, but it's you see of all of them, the kind of the price action there is the least attractive compared to the Nasdaq and the Dow. Right, that's pretty challenging price action there. Okay, it's taking these highs and stuff, but in terms of reversing off that, there's I don't see that as particularly pretty candlestick work. Okay, in terms of doing that, and as you've often heard me say, I'm always a bit what I like to see when I'm trading the indices here, these American indices on an intraday basis, is I like to see complete correlation. I like to see them all going in one direction. And if we've got Dow bearish, Nasdaq bullish, S&P kind of a bit neutral, and the Russell being a bit neutral, I'm always a bit where I always kind of tend to just leave it a little bit just to let them iron themselves out. I'll be looking at the Dow here and sort of saying, let's just go on that way, the one-minute chart. Yeah, I'd be expecting this in the same way we took the highs, okay, and closed, and then I'd be expecting us to take the lows, okay, and then I'd be looking at this kind of 30-minute range, okay, from the start of it, and a breakout of that range might be the way we play today. But yeah, I'd be looking, that's where my focus would be going into the start of the next hour, and see how that works here, how that works to kind of that low. What does it do? Does it basically continue as a way of like let's say a breakout of the first 30 minutes, because we've only got 4 minutes of the hour to go, or does it reverse off that? So that would be my focus. Okay, that would be my focus in terms of looking at that and how that plays out. But I would, as I said, I would just be a bit wary that you can see for yourself. Dow's pushing through its lows, Nasdaq's pushing higher, S&P is making its mind up. You can see the Russell is just kind of trying to make its mind up as well. There's not real correlation between everybody's moves. Okay, and as I said, I'm always a little bit nervous when I particularly see that. And let's just have a look at how kind of Russell's already done it. So 15-minute, yeah. So you can see on the open we pushed down, and then we've taken both. The Russell's taken both. Okay, I think that's probably where the action is. So you can see taking the lows, taking the highs, and back into the range. That's that's what the Russell's probably in terms of to look at. That's kind of interest. As I said, I'd be watching the Dow. And look at that. The Nasdaq's already pushing to those particular highs. All right, there you go, ladies and gentlemen. Let's draw that to a close. I apologise for my little coughing there. Okay, I'm full of cold and stuff. It's the part of the season, but nonetheless, listen. Thank you for joining us for these sessions in 2023. I hope you found them useful. I hope that's given you a little bit of insight. I hope it gives you a little bit of help in your own trading journey. I hope that you will do the exercise that we talk about here. Take a few hours to yourself, okay, over the next couple of weeks, and just basically review your trading performance of this year, and then use that data to help you start to make better trading decisions as you go forward into 2024. As always, I wish you the very, very best of success in your own trading journey, ladies and gentlemen. I hope you have a fabulous holiday period. I hope you trade well for the rest of the year, and I hope 2024 is a great year for you as well. Paul says, many thanks for great trading webinars, and Merry Christmas to you and yours. That's very kind of you, Paul. Yes, you too. All right, Merry Christmas to you and your family. Okay, thanks for everybody for turning up. But it's been great to see you, and I look forward to speaking to you soon. Many thanks. Cheers.